Hello. How's everybody doing? Today, state of the market. I'm going to do something fast about what I think the state of the market is, and then we're going to talk about the anatomy of a zone. It is Taco Tuesday. However, I'm having shepherd's pie for dinner. Jay Hemi was up. Look at that. Anatomy of the zones today. The first thing I wanted to talk about here is, let's see if this chart is this big enough for you guys to see well. Let me see here. Boop, 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 boop. There we go. Boop, boop. How about that? All that and a little of this, and there we go. All right. So for all of you that have been here, if you've been looking at the state of the markets, we've been doing a little education. Also, and a trade idea. We'll talk about a little trade idea here at the end. Also, I go live with Hannah tonight at 4:00 for Cash Collision Replay for those that have not seen it. You are welcome to attend. Click the link in the top. Now, basically what's happened over the last week. We've moved from zone 2 to zone 3. What does it mean? Okay, what exactly does that mean? So what I've outlined to you this week, but we're going to do it again, is VIX has 4 zones. And right now I put a line on that green line. Why is this all important? VIX's sentiment. We'll also talk about that here today. And I drew a green line at 18. So one thing I think you want to do is, when is the market free to move? Okay. So zones, right? Zones, we're going to go through what they mean, but when is the market free to move? Okay. When is the market free to move? Now, what do I mean by that? So you notice that VIX has been very stuck around 18, which is above 18 is zone 3 for us, for me, and hopefully for all of you. But it's been agonizingly stuck to that number. So can you believe, with all the stuff going on in the world, that VIX is staying in one place basically for the last, I would say, week at least? This is a chart of what I would call the VIX Cash Index. VIX Cash Index, 30-day volatility, meaning it's looking at 30 days ahead all of the time. Every day it'll be looking 30 days ahead. It is the only place in the market okay. So now here's the thing. We had that big rally volatility crash last week. VIX went from a 22.5. We had that big rally. This was a very large drop in volatility after basically the 90-day moratorium. China is talking to the US, whatever they're saying, who knows? All I know is VIX created a reacted viscerally to that market news. And ever since then, what has happened? Right? Nothing. Nothing has happened. VIX has stayed around 18. So when you're trying to look at, right, at the beginning we call the anatomy of a zone. If VIX is staying at 18, is that actually a zone? Okay. 18 is literally dead in the middle of all of the VIX samples that you can, like, so VIX is going to close at a price every day in the last 30, 35 years or whatever, because prior to VIX, there was the OEX volatility that you can use in a calculation. But essentially, 18 is like the dead middle. Half the samples are above into the close and half the samples are below. So 18 is basically the market, like right there. We're going to go up, right? And everybody going to freak out? Or is volatility come down and we start to get into what I would call the next bull market phase? It is, Rawhide, the line in the sand. So I'll ask now, after you've seen that, okay, we're dead in the middle. We just had a huge, I would say solid rally. Everybody's like, oh, that rally ain't going to last. It ain't going to last. It ain't going to last. And it's possible that it doesn't last. But right now, we are dead in the middle. Dead in the middle. And we are stuck there. So when I phrase it to you like that, and now I'll ask this question again. When is the market free to move? Do you believe right now the market is free to move? After just giving you kind of this evidence of what's been happening. What's holding it back? What is holding it back? Is there anything out there that could be holding it back? Well, we got this thing. A big, very good, Don May. We have a big, beautiful bill. And guess what? They can't make up their mind. Pretty much the whole country knows they got to not spend money. Doge try to not spend money, but apparently the guys running Congress can't quite figure that out. So I don't know what they're going to do. Probably everybody here that's balanced their monthly checkbook, paid their bills, realizes Congress can't keep going like they're going. They're the only ones apparently that think they can. That is why I believe, again, my opinion, that we are stuck here at 18. That is why. Because we got to wait until they are done. Now, are there other issues that could cause VIX to move around? So what I'm trying to present to you is, do you see how this VIX, this volatility index, can be an indicator of market sentiment? And how right now, how efficient the market is saying, hey, it could be great or it could be terrible. And we got to sit here and wait. Now, do you remember the last time the market kind of held this position, right? Where basically sentiment was kind of going nowhere, but the market was rallying. When was the last time we had this kind of like break in the action where essentially, like, was the market free to move, right? Right before the election. Right? People thought, right, Trump was going to win over Harris, at least at about 2 weeks before. Market rally, but volatility kept going up and up because nobody knew what was going to happen until after Election Day. So all of that angst was put into volatility, into the move. And then we had that giant rally, like that big spike. So volatility is, right, or the VIX is a pretty good indicator of sentiment. So if you want to use the information the market's giving you, it's giving you an idea of what traders think. Every trader in the world, right? The only place you can go where you get if you take everybody's opinion and you stuff it into a box, it's going to be the VIX. It's very efficient. And when it ain't moving, something's up. Now, what I want you to have now is let's see what relevant moves in the VIX are. So you can get a sense of what it's telling you about what should be happening. So right now we have 4 zones, what I call 4 zones. 8 to 13. VIX is 8 to 13. People are feeling pretty good. Economic prospects and the future are very bright. In general, the market is going up to some degree every day. A little bit here, a little there. Pretty happy. Zone 2, all of a sudden, option prices start to expand a little bit. People are starting to like, whoa, wait a minute. What was just good might not be good. That gets you all the way to 18, which is where we are today. Yeah, I like it. Zone 1, the economic certainty zone. Perfectly good way to describe it. Once we're over that 18, all of a sudden, option prices become what I would call high. Uncertainty about the future starts to creep in. Generally, these are economic events, big political events, elections, big spending bills, the Fed. These are like geopolitical economic forces that are huge relative to the market. So when I was a market maker, like a while ago, right? But I was a market maker for about 16 years, from basically all the 90s into the early 2000s. And a lot of the Fed wasn't really even in the market because the government was actually running relatively efficiently. I know it's hard to believe, but in the 90s into the early 2000s. After the great financial crisis, government spending exploded and things got kind of bad, which is where we are today. Kind of this sort of, I was 80s, 90s, early 2000s as a floor trader, basically. Very late 80s. So the idea is when you have such high economic influence from the Fed pumping in trillions of dollars and all that kind of stuff, it creates a lot of volatility. Or if they withhold that, that's how you get zone 3 and into zone 4. Zone 4 is basically economic uncertainty. Economic uncertainty, meaning what's the Fed going to do? I don't know. How big are these tariffs going to be? Is it going to destroy business all over the place? Oh, we're invading Ukraine, right? We're invading Ukraine. Oh, okay. There we go. Oh, there we go. Oh, that. All right. So, right, oil's not going to be around anymore, right? So when you have the massive uncertainty, you get up into zone 4. That's VIX at a 24 to basically 100. VIX rarely travels out of the 30s on the upside. Rarely. Maybe once a year, twice a year, maybe. It doesn't do it very often. That's why from a zone, right? A zone concept, basically we spend around 25% of our time in each one of these zones. And right now, we are dead in the middle. So, what type of trade would work better, in this type of zone? Calendar spreads, index calendar spreads probably work okay. Index butterflies probably work okay. The only problem you got is when we pop out, whenever Congress is going to announce whatever this is done. So the best tip I can give you for direction of the market is we got to wait till this bill finishes. Because in the meantime, the market could go nowhere for weeks. I'll give you an example. Let's say it's what was it before Gulf War II or Gulf War I, right? Market went nowhere for months, waiting for the invasion, right? Not a lot of activity, very illiquid. Right now, waiting for this bill because it has become so huge, it makes a difference. Treasury market's so big now, this all makes a difference, right? When I was starting trading, we were actually running out of treasuries because the government stopped selling them. They didn't need to anymore for a very long time, which created all kinds of other problems. So, but the idea is from a zone concept, you have the market is pricing time a different way. If you think about it, when option prices are very low, my 30-day, I don't expect a lot to happen in 30 days. 30 days is cheap. When I'm in zone 2, 30 days now becomes expensive. Remember, VIX is pricing always the same 30 days now until 30 days from today. That's what its job is. It does a pretty good job of it, in my opinion. So it's always pricing the same thing. It's like you go to the store, I'm going to buy an apple. Today, the apple's $1. You go tomorrow, apple's $2. Go the next day, the apple's $4. You're like, what the heck? Why is my apple so expensive? Now, do you think that's going to change all of the prices you pay for options or sell options for on any stock you're interested in? Any option trade you want to make is going to be affected whether we're in zone 1, 2, 3, or 4. And in each zone, you actually have an ideal trade, 2 ideal maybe trade types, maybe even 3, depending on the price of the options. I actually created a bunch of sheets around it with one of my students to try to take advantage of what's going on. That's another story, though. But for right now, you're basically looking to kind of collect decay, in my opinion, for the next, week, while these guys debate this bill, screw it up, whatever they do. And then when we come out of it, you're going to get some sort of who knows what kind of move. Is there opportunity to trade every day? I'm sure you got a little movement. Some stocks will do things. I think probably more interesting than index trading, at least for the short term, because an equity could do something with news and something like that. So you might want to shift your focus a little bit. But what I want to give you here next is, and then I'll take questions at the end about my tea. So Jose is asking me, so that is your suggestion, calendars to take advantage of theta? I would say for this week, yeah, it's probably the only trade. I mean, if you're looking for index money, that would be it. Dave P saying cans that can be kicked will be kicked. Probably will until one day they can't anymore. So what I want you to do is when you see VIX as a number, it's going to give you what to expect for the S&P 500. So a 16 VIX is 1% per day in the SPX close to close. Okay. So a 16 VIX is 1%. And like I said, we're pinned here at 18 until Congress gets his act together or does or doesn't, whatever they're going to do. Right. So that's slightly above 1% per day. And the last time I looked at the market, we were not doing that. We're down 1/4 of a point. So VIX is holding here at an 18, but we're only moving, we're down what, 0.25%? So here's my question for you. Do you think VIX is actually showing you an accurate display or an accurate portrayal of what is happening today? Today, right now, is VIX, does it feel accurate at an 18? If 16 points is 1% per day, we're only moving about 0.25%, right? VIX actually should be closer if today's move is any into, right? VIX should be around 8. Right? We're moving at a 0.25. Now, here's a question for you. Would anybody here sell VIX at a 4 based on what we're doing today? You got to think about it like that. Would you sell VIX at a 4? We're only moving 0.25% per day, so something's got to be wrong. No, you wouldn't. You would not. But you might want to sell it at an 18, right? You might want to sell it at an 18 if we're only moving 0.25% a day. And this is really how you start to learn to trade volatility and trade the range that's in front of you. Okay. A VIX 18 is 1.2 per day. So really, VIX is pricing something that we are not doing. We are not moving that much, but we very well could after Congress makes their decision. Okay, and does something. A 32 VIX, which we just were probably what, 2 to 3 weeks ago, 32 points in VIX is 2% per day. So what I'm giving you here is what the zone is and what the sentiment it represents. So if you're trading a vol product and VIX isn't moving at an 18, you're not going to get a lot of action. So for my RIP zone class, no real reason to put on a new position because nothing's going to happen. Now, next week, something could happen. But why put on more of the same if you think nothing's going to happen? If you're not going to move in a zone, right? The whole point of the zone concept for us is we generally move from zone to zone. And right now we're going to be stuck right here in a non-zone, not moving. All right. So I see questions in here. We only got 5 minutes left. So what I'm giving you here today is how to prepare for what's coming. If you think we're going to launch 2% tomorrow, good luck. Right? I don't view anything because basically what the market is telling you here, the market is saying we're waiting for Congress to do something. I would love to tell you we're going to have a lot of excitement. But I don't think we are. So the easiest thing to do is, so Congress is going to start, or you're going to start to hear news snippets, right? Right? They're cutting spending. They're not cutting spending. They're doing this. They're doing that, right? Just see how VIX reacts. If VIX starts tanking, like 18, 17, boom, 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 we could have a solid rally on our hands. However, just like on Monday, right? The downgrade that lasted for all of about 3 seconds, right? There was our little spike. That's telling you the market does not care, right? They care that Congress is going to do something. But when you see something, when you see the market hit a low, open in the morning, down low, VIX makes a peak and never sees that number again, in general, SPY is going to rally the rest of the day. That's a little trick. You see news, you see VIX, makes a high, never sees that number again for the first 30 minutes. Generally, we're going to rally for the rest of the day, or at least somewhat. And that's where we find ourselves now. The market cares more about what Congress does than what Moody's does. And we're going to wait for it. So we start to break below 18 seriously. The rally, I think, will be real for us, at least to 6,000 and beyond. Questions, comments? Where do you find VIX? VIXCentral.com, I believe, is a pretty good place. Let's take a look. It's free. SIBO website. TOS has VIX. Thinkorswim does. This is the VIX curve. Not a subject we're going to address here today. TOS has VIX in it. Has all of the short-term VIX indicators. Terry SC, VIX is creeping up this morning. So likely what will happen, Terry SC, is VIX will continue to creep up a little bit until when? Until we have news. And then it'll blow up because Congress just screwed up again, or the market likes what they did and it crashes. VIX crashes, and then SPY will rip. Does anybody have questions about what to expect when you see a VIX at a number and a move in SPX? You're like, hey, don't forget, this is what the market thinks you're going to do for the next 30 days. Not just for today, the next 30 days. Ask AZ. And I'll leave you with, those are your zones. So you know when you're in a zone, basically how to position yourself. And there we have it. I will make a PDF of this. I think Justin will send it out with the video. And then you have a little goodie when you have a question about what's going on. You're like, oh, what zone is this? You know, TradeStation has VIX. Oh, join us tonight. You want to hear more about this? You're like, I've never heard about this VIX stuff. This might be cool. Heck, we're going to do a whole thing tonight at 4 o'clock. A little replay. Check it out. Learn something new. Plus, Hannah explains everything I say. It makes it much easier. Much, much nicer. All right, everybody. State of the market is over. Thank you for being here. Check us out tonight at 4 o'clock. Hope you learned something. And by the way, I'm positioned just like this. So we'll see what happens. All right, guys. Have a good one.